Let's talk about a major financial event. Imagine sometime in the near future, say between January 28th and 31st, something just snaps in the global financial system. And I'm not talking about a simple market dip. I'm talking about a signal, a massive warning shot fired by a historical pattern that, once it truly begins, it just doesn't stop. We're going to break down what a collapse of this size really looks like, and more importantly, why it's a giant flashing sign pointing to the final stage of an economic cycle that has played out over and over again for centuries. This is the number that should grab your attention: $7 trillion. That's the kind of value that could just evaporate from global markets. I mean, think about it. That's just a staggering amount of wealth. But as shocking as that number is, it's really just a symptom. The real story, the one we need to understand, is the disease underneath. And the story isn't just the number, it's the speed. This wasn't some slow bleed over a few months. No, this was an absolute catastrophic failure in just 36 hours. You had gold hitting an all-time high, and then bam, it crashes 12%. Silver lost gains that took decades to build in less than an hour. And for the US dollar, the world's reserve currency, to fall 3% in 2 days, that isn't a dip, that's an earthquake. And that really brings us to the core question of this entire explainer. Was this just another blip on the screen, a crazy moment of volatility that we'll forget about? Or was it the first visible crack in a much larger, predictable, and frankly, unstoppable process? All the evidence we're about to look at suggests it's the latter. See, to understand what's happening right now, we have to pull the lens back and look at a framework, a pattern that has defined the rise and fall of every single major empire that's ever controlled a global reserve currency. It's a predictable four-stage life cycle. So let's just quickly walk through this four-step sequence. It always starts with stage 1, trust. This is built on a foundation of sound money and real, honest productivity. Then you get stage 2, seduction. This is when the empire starts, creating more money to pay for things it can't really afford, and it ends up exporting its inflation to the rest of the world. Inevitably, this leads to stage 3, the crisis. This is the part where the math just stops working and confidence completely shatters. And that brings us to the endgame, stage 4, the reset, where the currency itself collapses and wealth gets transferred on a massive scale. And before you start thinking this is just some abstract theory, let's look at the receipts. Let's look at the history books, because this isn't speculation. It's a documented, verifiable pattern. This quote really says it all. You can literally see the past echoing in everything that's happening today. So we're going to look at 3 completely different empires from totally different points in history: ancient Rome, Weimar Germany, and the British Empire. And what you're going to see is that all of them, every single one, followed this exact same 4-stage path right off a cliff. Let's kick things off with Rome. The denarius, that was the US dollar of the ancient world. It was trusted everywhere because it was 98% pure silver. That's stage 1. But, to fund their massive armies and huge spending projects, the emperors started to debase the coin, mixing in cheaper metals and reducing the silver. For centuries, this seduction stage actually worked. But then came the crisis of the 3rd century, when the silver content just plummeted to a measly 2%. And what happened? Prices went through the roof, trade completely collapsed, and any wealth held in that currency just vanished. The only people who survived financially were those holding tangible assets, like land. Okay, let's jump forward in time to a more modern example: Weimar Germany. After World War I, they couldn't pay their war reparations, so the government did the only thing it thought it could do. It just printed money. This is classic stage 2 behavior. The result? Well, in just 18 months, the exchange rate went from 191 marks to the dollar to, get this, 4.2 times trillion. People were literally using wheelbarrows full of cash just to buy a loaf of bread. A lifetime of savings became utterly worthless overnight. But again, and this is key, wealth wasn't destroyed, it just moved. It transferred to people who owned real assets, like businesses and foreign currency. And this isn't just ancient history or some weird one-off event. Within living memory, the British Empire, the world's undisputed superpower, watched its currency collapse. After 2 brutal world wars and massive social spending, the pound sterling, which was once the global reserve, entered its crisis phase. It was devalued by 30% in 1949, and then another 14% in 1967, and by 1971, it was over. The US dollar officially took its place. The pattern completed, once again, transferring wealth from anyone holding sterling to those holding dollars and hard assets. Which, of course, brings us to today. Because when you take this historical lens and you apply it to the United States right now, well, the conclusion is pretty hard to escape. The US is showing every single characteristic of stage 3, the crisis. I mean, just look at the raw numbers. As of January 2026, the US national debt blew past $38.4 trillion. But the truly mind-boggling part isn't even the number itself. It's the rate of change. It's growing by $8 billion every single day. That's not a sustainable path. That's the literal definition of a mathematical death spiral, where your debt is growing way faster than your ability to ever pay it back. And this, right here, illustrates the insane consequence of that debt. We now spend more money paying the interest on our debt than we do on our entire national defense, more than we spend on Medicare. Just let that sink in for a second. We are borrowing brand new money just to pay the interest on the money we've already borrowed. This is the textbook definition of being in stage 3. And those events from late January just prove it. Let's run down the checklist. A sudden loss of confidence. Check. You had a major European bank publicly questioning if they should even hold US treasuries anymore. Currency instability. Check. The dollar fell 3%, even with the Fed trying to prop it up. Foreign holders selling off. Big check. China just dumped $120 billion worth in a single month, a record. Political paralysis and mainstream denial. Check and check. Every single box on the crisis checklist is now ticked. So, this is the point where a lot of people get confused and, frankly, scared. Stage 4 doesn't mean it's the apocalypse. It doesn't mean society just ends. What it does mean is a massive, predictable, and totally irreversible transfer of wealth. This is probably the most important concept to get your head around. So let's be really clear on what a reset actually is. It's when the whole system breaks and the currency either hyperinflates into total worthlessness or it gets replaced by something new. And in that moment, wealth moves. It rushes from people holding paper promises in the old system to those who own real things in the new one. Let's make this distinction crystal clear. Currency is just numbers in an account. It's a temporary claim on productivity that gets absolutely destroyed in a reset. Wealth, on the other hand, is tangible. It's real. It's land, it's productive businesses, it's scarce commodities. It's the real stuff that gets preserved and, in many cases, actually multiplied during one of these resets. Now, I know what you might be thinking. Okay, but this time is different. Let's just tackle that head on. The technology myth? Technology will save us. Look, Germany was the most advanced industrial nation on Earth in the 1920s. The math still won. How about the too big to fail myth? That's exactly what they said about the Roman denarius and the British pound. And my favorite, American exceptionalism? Guess what? Every single empire in history thought they were exceptional, right up until the moment they collapsed. This pattern doesn't care about our feelings or our narratives. Okay, so if stage 4 is pretty much inevitable, what do? This isn't about running for the hills in a panic. It's about empowerment. It's about using this historical pattern as a strategic roadmap for how you position your wealth. So what has worked in every single past collapse? History gives us a very clear answer. Hard assets with provable scarcity, like gold and silver, things that can't just be printed into oblivion. Productive real estate, like farmland, that generates income no matter what the currency is doing. Owning equity in businesses that make real things people actually need. Think energy, food, infrastructure. Diversifying outside of a single failing currency system to spread your risk is also critical. And finally, your own skills. That's the one asset that can never be inflated away and can always generate value. This all brings us to two very, very different futures. For the unprepared, the person with all their wealth tied up in savings accounts, 401ks, and bonds denominated in a rapidly devaluing currency, the outcome is, frankly, devastation. But for the prepared, for the person who understands this pattern and is positioned in tangible, productive assets, their wealth is preserved and potentially even multiplied. It's the same event, but a completely different outcome. And it's all based on whether or not you understand this historical pattern. What happened back in late January, that wasn't the event. That was the signal. The $7 trillion that vanished was just the first wave of what is going to be the largest wealth transfer in human history. It has already begun. So the only question that really matters now is this one. Which side of that transfer are you going to be on? The pattern is here. The math is clear. What you do next is what determines every